Disclaimer. This podcast is for FCA authorized financial advisors only and is not for retail clients. The views expressed in this content and all other content on this channel are those of the individual speaking and do not constitute financial advice or a recommendation to invest in any product, asset, or strategy, including those discussed in sponsored segments. This content is for educational purposes only. Always do your own research and consider all relevant risks before making any investment decisions. This week I saw that both Aviva and AJ Bell Invest Centre have listed crypto ETNs for advisors. If they are now available to be invested with professional regulated advice, what do you think is holding it up for advisors?
You can distribute to the retail market in the UK. However,
so what are the controls and processes that you can put in place if you do want to, say, allocate 1, 2, 5% of a client's portfolio into a Bitcoin ETN?
Well, I can talk through with a couple of different hats, different businesses I run. So one of which, P1, which is we've got a platform and we've got an investment management business. So step one,
in order to even just achieve like a 1 to 2% Bitcoin exposure within a fund, they're going to have to jump through more regulatory hoops. What would need to change for that not to be the case?
well, one thing that I don't think a lot of people talk about, that actually I haven't heard anybody else talk about this, but this is fact. The regulator.
Hi, James.
Hi, James.
As the owner of an advice firm, an investment network, and an advisor network, what changes have you seen as a result of the FCA lifting the ban for retail investors and allowing crypto ETNs on the 8th of October?
I think the conversation around Bitcoin has increased a lot amongst regulated companies. I think regulated custodians, fund managers, investment managers, and financial advisors, because suddenly it's become accessible in a way that it wasn't before. So it's definitely spurred conversation. That's not to say that it's meant that any activity has seriously happened yet. I think it's the crack of a door to adoption, as opposed to a real spurt of action of adoption. It is my view anyway, and I think the evidence probably would show that, because I don't think the flows have been as great as they say were when the Bitcoin ETFs were first launched in the US, which saw this significant flow.
Well, you say that, but I mean, I saw some evidence or some data from 21 shares literally this week that showed a 6x increase in ETN uptake throughout October. So I can't remember the numbers. I think it went from like 30 million or billion to 200 and something million or billion. I can't remember, but it was a 6x increase.
Yep.
So it sounds like what you're saying is that's probably been led by retail, less from advisors.
That would be my gut. To be honest, I don't have any evidence to support that, other than the conversations that I'm having and what we're seeing with our own advisors and through our own investment platform and the discussions that are being had. There's discussions, but activity hasn't really shifted for us.
This week I saw that both Aviva and AJ Bell Invest Centre have listed crypto ETNs for advisors. So if they are now available to be invested with professional regulated advice, what do you think is holding it up for advisors?
It's still seen as a complex asset, and it is still defined by the regulator as a restricted mass market investment. That's meaning that it is retail appropriate. You can distribute to the retail market in the UK. However, that's caveated that there's got to be an appropriateness test to effectively apply to it, which means the retail client should be high net worth, sophisticated, which has got its own criteria provided by the regulator around it. Or for somebody that doesn't meet those criteria, it should be a relatively small element of their investable assets that are advised or placed into a product such as that. What that means is that anybody that's providing either advice or just access to a Bitcoin ETN has got to have a whole set of controls and processes around to make sure that a retail investor, let's just call, Mr. Smith, generic name off the street, who's, the average guy, isn't going and putting his £50,000 pension pot all into a Bitcoin ETN. That would be something that if you were a platform and you had a client, and even if they didn't have an advisor and they did that, you'd probably find yourself in in hot water, because actually the regulator would say that that is something you should not allow to have happened, because it is they still see it as a high risk, complex product that shouldn't be made available in that way to the retail investor. So there's an operational and compliance setup that needs to happen before you start advising on Bitcoin ETNs or making them available through their platform. And I've got those headaches in all the firms that I currently use, so I'm having to think through all of those things actively.
And what are the controls and processes that you can put in place if you do want to, say, allocate 1 to 5% of a client's portfolio into a Bitcoin ETN?
Well, I can talk through with a couple of different hats, the different businesses I run. So one of which, P1, which is we've got a platform and we've got an investment management business. So step one is our platform. So the platform is for an advisor to log into, to create an ISA, create a pension, create a general investment account, and invest their clients' money within it. So I need to make it accessible through our platform. So we don't do our own custody of client assets. We work with a third party who does that. So step one for me is I've got to get our custodian comfortable with holding a Bitcoin ETN, which they absolutely are. The next question comes, how are you making sure that you don't have an advice firm using the platform that is going to breach any of the guidance around restricted mass market investments, i.e. they're not going to be advising a client that's not high net worth, sophisticated, or a client that doesn't meet those criteria, advising them to invest a lot of their assets into that product. So that's then a question back to me. So we've then got to come up with a few things for the advice firms we work with. Firstly, we've got to make sure we can segregate Bitcoin ETNs as a product available to specific advice firms. And the reason we have to do that is because we're taking the approach where we're going to get an attestation from a advice firm to say they understand the rules around restricted mass market investments, and they are going to effectively guarantee us that they are going to ensure that they will never advise a client outside of those criteria. So we're having to get them to effectively just guarantee that they're going to follow the rules, which sounds like a very basic thing. But what it means is then we have to be able to segregate that asset to only specific advice firms that firstly understand Bitcoin and that understand the rules around restricted mass market investments. So that's something we have to do as a platform. Once we've done that, we can make it available to those firms that are happy to provide that attestation to us to say that they understand the rules and that they will ensure they're not going to breach them in their advice going forward. So that's step one with one hat on, my platform hat. As an investment manager, if we're going to create then portfolios with, say, the Bitcoin ETN as part of those portfolios, we've got to look and say, okay, well, at each risk level, we're generally doing risk targeted strategies in our model portfolios that we operate that advisors can invest their clients' money into. We need to decide how much we're going to hold of that Bitcoin ETN in a particular portfolio at a particular risk level. We would normally see the Bitcoin ETN falling into what we would say is our alternative assets bucket. So you've got your equity, you've got your bonds, and then you've got an alternative assets, very high level asset allocation, and we're going to drop it into our alternative asset bucket. So we've got to work that out. So we've got to work out what's appropriate at those levels. We then need to think back to the restricted mass market investment side of things. So once we've created those portfolios, we've got that allocation to the Bitcoin ETN. We've then got to make sure we're only making those portfolios available to advice firms that understand that this portfolio does hold a restricted mass market investment. Therefore, they've got to have the same considerations to advising a client directly into a Bitcoin ETN or to advise into our portfolio that holds an allocation to the Bitcoin ETN. They've got to ensure that they are viewing that in the same way as they would do if they're advising into the Bitcoin ETN directly. So that's sort of step two. All of it comes down to education, ensuring advisors understand the requirements around restricted mass market investments. I'll try not to say that too many times during this, but it's quite an important point because a lot of people don't understand it. And I think initially it goes back to the point. I think October came around, a lot of people were like, "Brilliant! Finally, retail investors can access Bitcoin," but that just wasn't true. Retail they can access it, but only if they meet certain criteria. And so it wasn't the big. I think it wasn't this big sort of opening up that people are expecting because of the lack of understanding around it being viewed as a complex asset, high risk, and met that RMI criteria. Then, so a platform hat, investment management hat, advice hat. So then advice hat. An advice firm has their advisors now, they generally focus on financial planning for their clients. So, talking about cash flow modeling, they're looking at the whole life objectives and trying to build a plan to meet that. So generally what you want to do is make sure a client understands, their objectives very clearly. And then they want to create a plan to meet those objectives. So there can be short-term objectives, long-term objectives. You then need to ensure, okay, so you need to save a certain amount to your pension, save a certain amount to your ISA, have a certain amount of protection, short-term, life insurance, etc. So the client's got certain resources available to them now, and you need to try to work out how they should be saving those resources or spending those resources to meet those, short, medium, and long-term objectives that they've established with you. Once an advisor's done that, they then need to select, well, for the investment portion or the pension portion, they need to advise the client how to invest that money to help achieve those objectives over the long term. Generally, an advisor will go down to a risk-based approach. So they'll do an attitude to risk questionnaire with the client. That will come up and say, right, that client's got they're comfortable with this level of risk to achieve that particular objective. They will then select, they'll either advise the client on individual investments or advise the client into a discretionary investment management portfolio, a model portfolio. That's generally where a lot of advisors are moving towards, advising into a discretionary model portfolio service. So there's a whole load of work that an advisor's already got to do with the client to take them through that whole journey. They've got to onboard them, they've got to create those, they've got to understand those objectives, create the plan, work out resources the client's got both now and in the future to be able to allocate to hitting that plan, and then work out the attitude to risk and invest that client into a portfolio that's going to help achieve those objectives that have been established. So there's already been quite a lot of steps, quite a lot of work that the advisor's got to go through before they're even investing the money. When you're adding something like a restricted mass market investment like Bitcoin ETN into the mix, either to advise on it as an individual asset or to advise into a portfolio that's holding it, that's adding another step. And a step that from a regulatory perspective would still be deemed to be risky. The safer bet, if you've got two equivalent portfolios, this is just fact, you've got two equivalent portfolios, medium risk portfolios, let's call it 60% equities, 35% bonds, 5% alternative assets. Let's just come up with a generic asset allocation at that level. It's safer to go for the portfolio that doesn't hold Bitcoin ETN than the one that does hold the Bitcoin ETN. From a regulatory perspective. So an advisor has to be so sure it's the right thing to be advising the client to go to portfolio B, the one that's got a bit of the Bitcoin ETN, say in that alternative assets bucket, than they do into the portfolio A, the one without the Bitcoin ETN. They've got to be so sure it's the right thing to be doing that unless they've got that surety and that clarity, they're always going to go for portfolio A at this point in time. It's higher risk for them, and it's potentially higher risk or perceived to be higher risk for the client by the regulator. So I'm just really trying to lay out the process that an advisor's got to go through and why they've got to make a final decision. Can I absolutely stand behind that this is the right advice to give to my client? Do I go for the traditional thing that's safe, that everybody else does? Or do I go for the thing that's a bit new, a bit untested, and that actually the regulator openly says is a higher risk thing to do? That's the barrier.
Okay, wow. You've touched on a lot of things there, James. So it sounds like for an advisor really has to have a thorough understanding of almost the history of money, the difference between money and currency,
Yep.
to understand what's coming in terms of most likely an inflationary environment led by government printing and debasement, to have that certainty that something like Bitcoin is a hedge against that uncertainty.
Yep.
And to then, it sounds like, add more work for themselves. So it's not just the risk, right? Human nature says if you're trying to onboard 50 clients a year, you don't want to add an additional 1 to 2 to 3 hours or whatever it is to go through that complexity when you've got the evidence-based system of 50 years of equities and bonds working. So let's just do that. We know it's safe. The regulator considers it safe, which
And I
Is a
think and obviously everybody that's in our industry now has all their working life's been within the last 50 years, right, in the system as we currently know it, in terms of a fiat-based system. So it is quite difficult to move beyond that or see anything different from what everybody's just experienced within their working life, particularly advisors.
Hi team. A quick interlude to ask, what if you could offer your clients Bitcoin exposure on a regulated investment platform? Because that's what my friends at P1 have done. They've created a discretionary model portfolio invested into companies with significant operations in digital assets, available within general investment accounts, ISAs, and pensions, and managed by award-winning investment professionals. With P1's digital assets portfolio, you can access a professionally managed portfolio of listed companies powering the digital asset economy, such as miners, blockchain infrastructure, payment services, and listed companies with Bitcoin treasury strategies. It's Bitcoin and digital asset exposure built for regulated advisors. It's diversified, actively managed, and with full transparency. P1 created the portfolio for advisors who see the long-term potential of Bitcoin and the digital asset economy, and who are starting to look at how best to facilitate exposure for their clients. It is packaged in a way that fits into an advisor's day-to-day investment advice process. So if you're an advisor who wants to offer digital asset exposure without the operational headaches, visit the URL in the show notes or use the QR code on screen. P1, bridging traditional finance and digital assets, only available on the P1 platform and via regulated financial advisors, and the value of investments can fall as well as rise, and you may get back less than you originally invested. Now back to the show. Yeah, absolutely. I mean, Bitcoin is such a paradigm shift. Once you start down this rabbit hole, it's kind of enlightening in a way, where you're sort of thinking everything I've been told, let's say everything I've been told is a lie.
Yeah.
Right? Especially since 1971, since we came off the gold standard. And the returns that we're generating for our clients, certainly from my experience as a financial advisor was very brief, but I was essentially selling people into products that were returning 6% a year, 7% a year. I was taking one of those. The headline rate of inflation at the time was 4%. So, it's returning maybe 1 to 2% above the headline rate of inflation.
Yep.
But if you seriously track the prices of the things that you have to buy, the real rate of inflation is double digits. So, I felt, or I knew, my conviction was so high, I'm actually harming people long term. If I'm putting them into funds that return 6 to 7% a year, I take one of them. They're falling behind at a rate of 3, 4, 5, 6 percentage points every year. And so over the next 20 years, that's going to harm them. And then raising that internally at the firm I worked at and saying, can we look at some exposure to Bitcoin, was obviously immediately shut down.
Yeah. Well, probably at that time as well, which was a few years ago, I think, Dan, wasn't it now?
Yeah, it was a year ago now, roughly. Yeah.
Oh, a year ago. But even a year ago, to be honest, things have shifted a lot. Yeah. Anybody at the top of a large advice firm is going to go, this guy's a bit of a nutcase. He's potentially a bit risky. He's talking about this stuff that's not, our normal way of operating. So you do become a black sheep quite quickly.
Yep. Yeah. Definitely felt that. But now I feel like I'm on the right side of history, right? So I'm trying to train financial advisors to give them that understanding and hopefully create that conviction that a small allocation to Bitcoin is a hedge against inflationary environments, currency debasement, and just generally uncertainty. I like the, why do billionaires buy art and then hold it in free ports?
Yep.
It doesn't have any value to them other than it's a hedge against uncertainty, because they, if you buy a Van Gogh, they can't make any more of it, so it's going to go up in price in fiat terms. Bitcoin has exactly the same thesis. So you touched on the regulatory perspective there. So the fact that, in order to even just achieve like a 1 to 2% Bitcoin exposure
within a fund, they're going to have to jump through more regulatory hoops.
Yep.
What would need to change for that not to be the case?
Well, one thing that I don't think a lot of people talk about, that actually I haven't heard anybody else talk about this, but this is fact. The regulator has made it clear that if anybody's looking to distribute the Bitcoin ETN, so this could be a platform making it available, this could be an investment manager using it as part of a portfolio, or potentially, I need to look into it a little bit more, potentially advisor looking to advise on it. The regulators actually ask regulated companies to let them know in advance if they are planning on doing that. So for us as a platform, and this is why things have, say, taken a little bit longer for us, because we're having to think through more than I initially thought we would have to, we will have to notify the regulator that we are intending to make a Bitcoin ETN or multiple Bitcoin ETNs available through our platform. And we will need to give them evidence of our systems and controls to ensure that it's not being used incorrectly by advisors or made accessible to clients that shouldn't have free accessibility to it. And they're going to want to know what our target market is. You know, why are we doing this? Why is it adding value in our proposition to do so? So actually, there's hurdles right from day dot. You can't just make it available. The regulators now said, please tell us if you're going to make it available. Whether people have or not, I don't know. But this is clearly what the regulator said, which is something that will be a barrier. The reason being is because a lot of other, say, big investment platforms, big investment managers, do they want to go and say to the regulator, we're going to make this available? Because actually what it does is it makes the regulator take an interest to say, all right, so we see this as a high-risk product. You're going to be making it available. Okay, what else are you doing that could be deemed to be high risk? So actually, I think that in and of itself is creating a barrier generally across the industry of making it available, because the regulator is saying, let us know if you're planning on doing this. And if you let a regulator know something, you will definitely get a lot of questions back. So you're going to be in a conversation with them, which isn't necessarily a negative thing. And it can be a really positive thing, but it's still a conversation you've got to have with the regulator about making what they perceive as a high-risk product available to a retail audience, which creates scrutiny.
Yeah, no, no one wants scrutiny from the FCA, right?
Exactly.
Okay, so, but what would be the actual steps from the FCA that would need to change for people to not feel like they're going to come under that scrutiny? So, for example, would it need to be reclassified from RMMI to AN other classification, for example?
There's a lot of restricted mass market investments out there and high-risk products. Leveraged ETFs, you know, you get 2 times leverage, 3 times leveraged ETFs. These are complex assets, and people make them available regularly. I think what it comes down to is the years of regulatory uncertainty and bad smell, if you want to put it, around crypto generally, has created this sort of enhanced view of this potential risk or regulatory scrutiny around it, which has made people particularly cautious with moving forward. And it's also talking about the black sheep. If you're the first mover, that can be an advantage, but it also can be a risk, right? So it's great that you've got a couple of really well-known, large, institutionally sort of established platform operators and established household names in financial services made it available. That's a massive positive thing, because it gives other platforms, other investment managers confidence to take that step. It will become easier. So yes, I was getting back to your question. It will become easier the more people do it, the more you aren't the black sheep that are standing out there, you know, potentially putting yourself up for scrutiny, putting your head above the parapet. So the more that do it, it's a snowball, I think. If you end up, once you get to a point where half of the investment platform market has Bitcoin ETNs available, the other half will quickly do it. It's the first one or two, the third, the fourth, the fifth. Each one becomes slightly easier, because you're not the first one. You can point and say, well, these guys have done it. You know, we're not doing something that nobody else in the industry is doing. It's unfortunately, caution pervades in regulated firms in the UK. And I think it sort of needs to, right? If you're being trusted with a lot of people's money and you're providing access to various products. But people do follow a crowd. You can't get away from that. People do. There's only few and far between of people that are willing to take that step like you did, you know, start talking about, I want to provide some Bitcoin exposure to clients. hardly any advisors were going to do that, that were at the firm that you were operating with. So you need those people to take those steps initially, because they sort of cut the path through for others to follow, and the path becomes more established the more people do it.
It's yeah, it's interesting you use that and sort of metaphor of cutting the path. I have, in the low moments of starting the Bitcoin IFA, I have described it as I'm trying to hack my way through the thickest rainforest using a blunt machete on my own,
Yep.
but hopefully so that other people can follow.
Yep.
And
well, that's it, right? But it's then you got all the you got the snakes and the things that are going to hurt you along the way. So you've got to be ready to take all of that stuff as you're hacking through.
I've certainly taken some slings and arrows.
Yeah.
So, it's an interesting one. So my background is in ad tech startups, martech startups, and there's a very famous saying in that, which is you can be first in market or you can be best in market, and very rarely you can be both, right? So Facebook is a great example, Amazon is a great example, first in market and best in market. And when you get that, the flywheel that is created, it just accelerates, right? And I remember my first exposure to the caution of the UK financial market came literally a month or two after starting the Bitcoin IFA. So back in early 2025, April, May, something like that. And I was chatting to someone from an ETN provider, one of the lesser known ones. And they were saying that they're having conversations with all of the large banks about Bitcoin. So, and holding Bitcoin within their apps, right? So, Revolut, I don't know if Monzo do it, but these guys, the e-banks have allowed this pretty much from the beginning.
Yep.
But the likes of NatWest, Barclays, Nationwide, etc., Lloyds, they don't. And apparently, this is what the contact told me. I don't know whether this is true, but they're all building the rails in the background to be able to do it. But none of them want to be first.
Yep.
But none of them want to be last. So they're waiting for one of them to put their head above the parapet, see how that goes, and then launching it themselves. And it sounds
I would say that's very likely to be true. There's people talk about these stale large institutions, banks. They can appear that way, but there's still a lot of smart people in them that are seeing what's coming in the future. So then there's a battle between the product the product people that are trying to design things for the future, that their customers are going to want, and then you've got the compliant, you then got ops, and then you've got the compliance and the regulatory people that are generally sort of holding things back. So I think there's definitely that happening. I would nearly guarantee it, because I think they'll know it's inevitable, this move. They'll have seen transactions, people moving money to Coinbase, to Kraken, to the exchanges. They know there's a demand there. They know big institutions like BlackRock and stuff have done it. They aren't going to be building this stuff in the background, because else, if they aren't now, and suddenly it becomes in 3, 4, 5 years' time, everybody else is doing it, they're going to be so far behind the curve, it's going to potentially, lose them a huge amount of custom.
Yeah, completely agree. Let's touch on the ETNs. So obviously we've had ETNs launch rather than ETFs. There's a lot of noise online about ETF versus ETN versus ETP, the difference between those. But my understanding is, because the ETNs are, and the crypto ETNs especially, have to be 100% backed, institutional grade custodians, 100% transparent. So the use case for the end consumer and for advisors, I guess, is fairly similar, right? Between a crypto ETN and an ETF.
Yep.
What are your thoughts on that?
Well, to be honest, it's actually interesting. By the way, I don't call myself an expert in exchange traded notes, exchange traded products, exchange traded funds. So, and there are experts, and there's a lot of nuances around the different types, how they're regulated, how they operate, what the underlying sort of custody counterparty structures are. I mean, an ETP generally is something that describes everything that would be called an exchange traded exchange traded fund, an ETF, exchange traded note. Which is the Bitcoin, the crypto ETNs that are currently being made available to a retail audience, and ETCs, exchange traded commodities. So I think people generally use actually all three of those, or actually all four of those terms, interchangeably. The nuance between an ETF and an ETN is generally that an ETN is structured as a debt instrument. So there's a counterparty that's holding the asset, and they are creating an instrument, a debt instrument, providing exposure to that asset, which is what the ETN effectively is holding. It's holding that instrument, providing exposure to the counterparty that's holding the bitcoins themselves. So I think a lot of people in that world, and I think you probably have these conversations, Dan, people say, why would the regulator allow a Bitcoin ETN or crypto ETNs to be made available to retail audience, but not an ETF? And I can't answer that question. And I think a lot of people struggle to answer that question, because actually an ETF is just literally going to be a fund that's actually buying and holding the asset, which to me sounds like a simpler product. And my gut is because an ETF is something that is more used amongst investment managers, financial advisors. It is more of a traditional way of getting exposure to a particular asset or market than an ETN is. So actually, I think there was probably a purposeful decision to say, okay, we don't want to be seen that we're behind the US, we're behind other countries that are doing this stuff. So we want to make a product available, but we don't necessarily want adoption to be massive, at least initially. So that's my slightly cynical view. I would love it if somebody could give me an answer why the regulator wouldn't just allow BlackRock to launch its Bitcoin ETF, etc., or 21 Shares, Wisdom Tree, whoever it is, but they're allowing them to do an ETN. Doesn't make sense to me, other than it's going to slow adoption rates.
I think it definitely will slow adoption rates. And yeah, I mean, the cynic in me would agree with you as well. But my understanding is, and this may be wrong, so don't trust, verify, but my understanding is the ETFs in the US can be launched under, so they call both of them ETFs, but there's two rulings that have a year to them. So like, I don't know what they are, but let's say like 1963 and 1982 or whatever, right?
Yep.
And one of them is an ETF as a fund, and one of them is what we would call an ETN.
Yep.
And the ETFs that were launched in the US have essentially been structured like ETNs that we would call them. So we have kind of replicated what they have available.
Okay.
The other reason is UCITS. So UCITS requires broad diversification. My understanding of broad is a minimum of 5 assets. So it's a maximum of 20% to a single asset within a fund. So a fund has to have broad diversification. So which is why in Europe, we can't buy a single gold. We can't buy a gold ETF. It has to be a gold ETN because a single asset is not broadly diversified.
Which is the ETC name that people call an exchange traded commodity, which is effectively that, yeah.
Ah, okay. So you can buy a gold ETC, but not a gold ETF.
Well, effectively, yeah. I mean, it's just a descriptive name for it. That's why I think a lot of people use them interchangeably. So I think that and just this conversation alone, I think, shows how confusion can be established, because actually you've said something there, Dan, that I wasn't completely clear on in terms of that naming convention in the US actually doesn't quite match the naming convention here, which again I think is part and parcel of the regulatory uncertainty that pervades, because actually a lot of this is just semantics, but it's semantics on top of legislation that's quite detailed and quite complex, which again creates the uncertainty for adoption.
Totally agree. And so I think in order to get an ETF, and we should get a Bitcoin ETF at some point, but in order to do so, we would need to change the rules around UCITS ourselves. So like, we're no longer in the EU, so we don't have to abide by the EU's UCITS rules. We just haven't gotten around to changing those yet. So we would need essentially an act of parliament to sort of supersede that old EU rule around UCITS. And I can't see this Labour government going for that in any way. I mean, I think they would take their recommendations from the FCA, and I don't believe the FCA are going to push for that, certainly within this parliament. It seems like if the polls are to be believed, it seems like Reform may be our next government, and they seem a bit more conducive to Bitcoin as an asset. Okay. Do you think though that the ETN and the confusion around ETNs, do you think that will have slowed down adoption by advisors, or do you think it's more just completely the regulatory side? Hey team, a very quick pause. If you're a financial advisor, wealth manager, or accountant, chances are your clients have already asked you about Bitcoin. And if they haven't, they soon will. Which is why I've created the Bitcoin IFA webinars. The webinars are designed to give you all of the information you need to confidently talk about Bitcoin with your clients. They're on demand, so you can watch them at a time that's suitable for you. They count as 90-minute structured CPD, and you'll get priority access to the Bitcoin IFA community. Head over to the bitcoinifa.com to book your webinar today. It takes less than 60 seconds. Again, that's the bitcoinifa.com to book. Now, back to the episode.
I think it would slow down the adoption. I think if you speak to most advisors, they will have used or advised on an ETF before. They wouldn't have necessarily advised on an ETN before. So I do think it would slow down adoption. I think the very simple example, BlackRock, a huge institution, people trust it a lot. If there was a fully UCITS, and this touched on the regulation too, but if there's a fully UCITS compliant BlackRock Bitcoin ETF that was available, the adoption would be significantly higher than having this restricted mass market investment, this complex asset as a crypto ETN. So I suppose my answer is saying I think both are potentially hampering adoption. They create uncertainty and they create perceived risk in adopting and advising clients to use it.
Yeah, I completely agree. I think you're absolutely right. If someone like BlackRock, and then as we record this, it's going out in a few weeks, but as we record, Vanguard seem to have toppled, been a domino to topple to allow Bitcoin and crypto ETNs on their platform and within their funds. And so those bigger names, if they were to just have an ETF, everyone knows what that is. Advisors and most of their clients or customers would understand what that means.
Yep.
The ETN thing does add some complexity, and that you've got 20, 30 years financial services experience. You're really clued up. I'm a Bitcoin expert with some exposure to financial services and financial advice. And even in the course of this conversation, we're both finding out new things. So it's completely complex, especially for the client.
Yep,
so
absolutely.
Yeah, totally hampering that. There's a couple of things that I want to touch on with you. So as it stands, HMRC have confirmed that you're allowed Bitcoin ETNs within an ISA.
Yep.
And then from the 6th of April next year, that will either have to be, it will need to be transferred into an innovative finance ISA, which most platforms don't offer because they are an incredibly niche ISA, basically invented for peer-to-peer lending.
Yep.
So what I would imagine will currently happen is everyone will become a forced seller within their ISA and then a forced buyer within a general investment account on their platforms.
Yep. Well, I can tell what you're thinking, Dan. It's completely logical to allow Bitcoin ETNs or crypto ETNs to be held in a normal ISA and then to remove it, 5 or 6 months later. Very logical. I mean, nobody can quite understand the decision making around that. How can it, from the 8th of October to the 5th of April, be fine within a standard stocks and shares ISA, and then suddenly it not be fine? Doesn't make any sense. You would have thought, if anything, they would have just HMRC and the regulator would have had a little discussion before the removal of the retail ban on the 8th of October and said, it can't be in a stocks and shares ISA. It's got to be in an innovative finance ISA. It probably shows just simply a lack of communication and coordination between two effectively government bodies. Therefore, HMRC is having to catch up on its decision making. It is a nightmare, and to be honest, it is a barrier with a lot of investment platforms, and it's something we've had to consider as an investment platform. Because actually, if we're going to make an asset available on platform, it's actually quite easy for us to say, it's only available to that advice firm or that group of advice firms. It's actually more difficult for us anyway with our technology to make it available only through a GIA and a pension, a general investment account, a pension, and not through an ISA. So you've got to build a way to segregate the asset, not only from particular clients or particular advice firms. You've got to then segregate it away from the ones that can access it. You've got to segregate it away from one type of investment account. So it's an added layer of complexity that makes not much sense. Yeah.
It's completely bonkers. And like, what do you do? I assume they've done it on the tax year so that any gains or losses that are made within a traditional stocks and shares ISA are just negated, just wiped out, and then you basically start tracking them at the forced purchase within the GIA on the 6th of April 2026. The cynic in me would say HMRC, you're right in that there was a lack of communication, and then HMRC are just saying no, like, we'll allow people to buy this, but we're taxing them to the hilt on it. Like, we want any gains made from it within an ISA. We want it in a general investment account. We know that innovative finance ISAs are rarer than rocking horse poo, so let's get them in general investment accounts.
Yeah.
And then tax everyone on the sale and gains.
Yeah.
I didn't appreciate the complexity in the back end for, say, an investment platform, that you can't allocate an asset to a particular wrapper, so that so only having it available, because I'm assuming you're not going to launch an innovative finance ISA.
No, we're not. No.
So to basically remove 1/3 of the routes to market for that asset.
Well, funnily enough, it's most investment platforms will be set up so that they can probably isolate the pension away from the GIA and the ISA in terms of asset availability, because there's slightly different criteria in terms of what can be held in a pension, what can be held within a GIA and ISA. But actually, generally, a GIA and ISA criteria is pretty matched in terms of what can be held. So it's not something that's not possible to do. It's just an additional layer of thinking and complexity and control mechanisms that need to be put in place. And the problem is as I think you put something out, I saw on social media quite recently, and I agree with, I think a lot of people are going, well, if we make it available through an ISA, are they then going to change it? So, they're going to make a different decision by the 6th of April. So suddenly it can just continue to be held in there. I don't know. So the easiest thing is to say, you know what, we're just not going to allow people to hold it in their ISA, which is the decision that we are making. Just because it's too difficult you get to the 6th of April or the 5th of April, and then you're having to effectively force sell everybody, which is not something that's easy to do, because if it's not somebody's decision to do, we're forcing it on them. We're being forced by HMRC effectively to do so. But there's still a lot of thinking in the communication of that, how you do it, the timing of it. There's a lot of risk and thought that needs to go into it. So the easiest thing is to say, just don't make it available in the ISA. That's the path of least resistance.
Yeah, I mean, the only silver lining is that it is allowed within SIPPs, it's allowed within pensions, and to quote a good friend of both of ours, Peter Lane, when he was on the podcast, he said, look, if you want to hold something for 15 years, it's Bitcoin. If you want to hold it for 15 minutes, it's something else.
Yep.
So at the very least, we now have regulated exposure within SIPPs. And it looks like, at the time of recording, that's not going to change for the next tax year. And so if we're thinking in decades for our clients so that they can focus on the present, then having some Bitcoin exposure within their pension is great. So the silver lining here is that the longer term planning within the pension rather than the ISA looks like it's kind of there, right?
Yep.
Like ideally it would be an ETF, but it's an ETN that essentially functions like an ETF, and it's available within the SIPP for long-term planning.
Yeah, my assumption would be, I think, which is what you're touching on, I think, absolutely, it's great that it'd be a nightmare if it wasn't able to be held in a pension scheme. It's absolutely clear on our platform, as it is for most platforms, well over 50% of the assets on platform are within a pension environment. So that is the bulk of, particularly intermediated, i.e. advised platforms, the bulk of the assets that are held are within pension schemes. So that is, looking at it in a positive note, It's great that it can be held in a pension scheme. It's a shame there's this weird decision making around the ISA, but I don't expect that to remain. How quickly that will be changed so it can just be held as a stocks and shares ISA, I don't know. Hopefully somebody will look at it and go, this is mental, and make a decision to change it before the 5th of April. But nobody's got control of that, so you have to just play it as you can see it at the moment.
Well, HMRC have control of that. We'll see.
Yeah.
I personally think it will become too much hassle and just too convoluted. I think it will get rolled back, but that's a personal opinion, not financial advice. Don't invest in an ISA based on my personal opinion.
Yeah. I think it comes down to the crux of actually something slightly separate from Bitcoin too. And again, I definitely don't want to get political or anything like this, but I think it does come down to this thing where if governments want people to save, they want certainty. They got to stop cocking about, for want of a better phrase, with tax reliefs, the type of savings vehicles you can have, then removing, retrospectively changing things, putting caps on, fixing caps on pension contributions, etc. All of this sort of uncertainty and this chopping and changing all the time just actually creates the behaviors that supposedly they don't want, which is people just not saving for their future. All I can see recently in the decision that's being made that are coming out in terms of, this cash ISA thing where under 65s, you can only put 12 grand in a cash ISA, forgetting about cash and Bitcoin for the moment, why add that complexity in there? Why? It just seems farcical to me. And the amount of pension change that have happened in the last few years, bringing pensions into your estate for inheritance tax, which is coming very soon. All of this stuff, I just think it's so detrimental to people really being able to look into the future to save for themselves, their families, and be able to make strong, confident decisions. All governments have done, and I'm not just talking about the current government, I'm talking about the last probably 10, 12 years, but probably for longer than that. They just keep on changing things, and all it does is create uncertainty. It creates effort, uncertainty, it reduces productivity, it reduces people's confidence to save for the future. So it makes people more and more short term, which, being obviously in the Bitcoin space, the short term is something that actually, you need your day-to-day stuff, you need to be able to do stuff, but actually people in the Bitcoin space are generally looking really long into the future, so they're juxtaposed there. In terms of what the government does fiddling. Lifetime ISA is a classic example of that, right? I think they're potentially looking at removing the lifetime ISA. I can't remember exactly if they had said they were going to announce it. That was a different type of ISA. We never launched it because, again, our view always was somebody's going to fiddle with it or remove it at some point. Therefore, we're not going to spend the effort building it, even things putting terms and conditions, key features documents, all of the stuff you have to do to be able to launch these things. We're not going to do it because, next government's just going to remove it. What's the point? The things we know is SIPPs have been around for a long time, pension legislation has, and ISA's been around for a very long time. So let's just keep it simple. Let's stay with the things that have been around, that have been relatively stable for a long period of time across multiple governments. Things like innovative finance ISAs, lifetime ISAs, all the sort of the things that are on the side, the weird evolutions of these things. Somebody's just going to remove them or change them too much in the future. So, let's just focus on the core.
It's interesting the way you've just described those, the more niche products is probably how most advisors are thinking about Bitcoin right now.
Yeah, potentially. Yeah.
But you're absolutely correct, and look, this is we shout this out in almost every episode. There's always a link to this in the show notes. If you haven't seen it, go and watch it. It's Joe Bryan's "What's the Problem," where he essentially runs through the detrimental effect that we've had on our money supply leads to short-term thinking, right? And if you continually mess around with people's futures, either by debasing the currency or having complexity in actually saving for the future and investing for the future, it creates short-term thinking, and short-term thinking creates, a multitude of second and third order effects on wider society. So,
yep.
Absolutely.
And it comes down to something, we're probably going into something more deeper now, but I think we probably agree on this, is short-term thinking actually, I think, is the root of all evil, not necessarily money, however you perceive money. Because if everybody's thinking at the long term, very long term, actually, you do make better decisions. For example, even drinking a lot in an evening, maybe enjoyable in the short term, probably not that great for the long term, and you're gonna feel bad for a long time afterwards. So that's a very simple example of actually sometimes that myopic thinking about short-term pleasure, short-term spending, anything in your life that's very short-term focused, generally it actually plays out negatively in the future. Where actually, if everybody can focus and there's the stability to be able to look long term and plan long term, generally everything gets better. And I think that comes to the root of the difference between something like Bitcoin or the fiat money system, where fiat is inherently short term. The problem is it's getting shorter and shorter term decision making. It's literally taking investment time horizons, taking everything, all decision making down to shorter and shorter windows of decision making. What's going to happen in 10, 20 years' time? Don't know. We'll deal with that then. That's effectively people's position.
Completely agree. And then when you're a Bitcoiner and you realize that we're currently mining 3,000 Bitcoin a week, we have a halving in 2028, 2032, 2036, and 2040, roughly. By 2040, we'll be mining, I think the stat I saw, I think I worked it out myself, actually, it's 190 a week. Current estimates put Bitcoin treasury companies' demand at 10,000 a week. So we're already, just from Bitcoin treasury companies, there's 3x demand the supply every week. That supply is being met by the OGs that hold, dozens of thousands, if not hundreds of thousands. Yep. So they're distributing their coins, which leads to even more decentralization. But, when we're mining 190 new Bitcoin a week in 2040, you're probably going to think, I wish I bought some in 2025 when it was only 100,000 a Bitcoin. And that's the, it's a seismic change that Bitcoiners go through. And so generally you tend to find that once someone gets into Bitcoin, they start to think longer term in everything, as you've said. They start to lift heavy things. They start to move their body a bit more. They tend to eat healthier. They don't drink as much. And you can see it. Within the Bitcoin community, there is generally very, very healthy people because they're thinking, maybe I want to put the time and effort into making my own food rather than buying this short-term, easy microwavable meal that's full of God knows what.
Yep.
Right. So yeah, it's a really good point. The last thing I want to touch on with you, James. So we've just had Bitcoin exposure through ETNs launched. But I think ultimately the dream would be that we could hold some direct exposure, right? Yep. May not be all, but we might want to have a mix of direct exposure and ETNs within our tax wrappers for our clients. Is it something that's crossed your mind yet in terms of getting those rails in for that direct exposure to be able to either hold it yourself or, use a third-party custodian that you trust, but that you've got, say, someone putting in 20 grand a year into an ISA and they're buying 5 grand of on-chain, 5 grand of an ETN, 10 grand of the MSCI World Index, for example.
Yep.
Is that something you've thought about? If not, how far away do you think it is? What are your thoughts on it?
Hey, team. Just a quick pause to say a huge thank you. You've given us your most precious assets, your time and your attention. And honestly, it means the world to us. If you've enjoyed this episode or you take value from these conversations, it would really mean a lot if you could like, comment, or subscribe. Those things really help the algorithm and they help the channel to grow. And if there's someone in your life who would take value from this, maybe a fellow advisor or someone just curious about Bitcoin, please send it their way. You never know what it might spark. Okay, back to the studio.
I think it all comes down to custody. And this is where I think that's where the complexity comes, right? So the reason you have a Bitcoin ETF or Bitcoin ETN is so that a third party can custody it for you to a great extent in a very simple manner in a regulated environment. You can't self-custody a Bitcoin ETN. It's actually, I think it's either impossible or you can't actually self-custody a share now. You used to be able to, there were, you had paper share certificates. You could actually be the bearer of a share. Obviously, there used to be bearer bonds. There used to be all sorts of things in the past. I think that there's definitely room to avoid a fund structure for cost purposes. If you don't have to pay the 0.15%, the 0.2% ongoing over the next 30, 40 years, potentially a good thing, right? So absolutely, I would love to work with the likes of Fidelity Digital Assets, something like with our platform in the future. So actually somebody could buy a Bitcoin or a part of the Bitcoin within their portfolio, within their tax wrapper. The only thing I would say is that wouldn't change the fact that it's still going to be custodied by a third party. I don't think you can have anything within an ISA, as an example, or a SIPP that you self-custody. Now,
Yeah, true. You can within a SASS.
Well, no. So I know quite a bit about SASS because we do actually a lot of that in my advice business. So I absolutely see what you mean. You can buy commercial property within a SASS. You can loan back to your company within a SASS, but that property is still in the name of the trustees. You aren't self-custodying it. It is still in the name of the trustees. You cannot, as an individual, actually, you could be your own trustee of a SASS, but actually, people that try to do that generally they fall foul of pension and pension regulation and HMRC quite quickly. So a lot of people don't do that. But you've always got to, even if you don't have a professional trustee involved in a SASS and you're the member trustee and you're operating your own small self-administered pension scheme, for those that don't know what a SASS is that we're talking about, most people maybe think we're talking about some sort of software as a service. We're not. We're talking about SSAS as small self-administered schemes. You are still actually beholden to HMRC and to pension legislation in terms of what you can do with that asset. You can't just do what you want with it. It is not the same as holding something in your personal name, self-custodying it. Hold a gold coin at home. You do what you want with it. It's yours. It's in your possession. So I really struggle to see how we can get to a point that you could hold Bitcoin effectively within a private wallet, within a wrapper, such as an ISA or a SIPP, because I don't think you could do that with anything else anyway. So I don't think it's sort of part and parcel of having those tax efficient wrappers. They're sort of a gift from the government to be able to have, whether you want to see it as a gift or not, or just people's rights, to be able to have this sort of tax-free or tax-efficient environment to hold assets. And that means it has to be held in a certain way, normally by a regulated party that is making sure you aren't breaching HMRC's rules or the pension regulators' rules. So the benefits I see is being able to not have to pay a fund management fee to the likes of BlackRock or any other ETN provider or ETF provider in the future through a Bitcoin ETN. It's not going to change the position with custody.
Yeah, it's an interesting one because I feel like we could get to a point where you have your trusted third-party institutional grade custodian, right? If a client comes to you and says, I've already got 10 Bitcoin, 8 of them are within, but none of them are within tax wrappers right now. And I want to move, whatever it is, 0.15 of a Bitcoin into an ISA with you. And so they'll send it to you. That's their 20K top up for the year.
Yep.
You're going to hold it with a third party institutional grade custodian, but with a multi-sig. So one with the custodian, one with you, one with them. Yep. And it's a 3 out of 3 to move it.
Yep.
Then that essentially is self-custody for the client to an extent, right? Because it can't be moved without their permission. And I think that's where you're right.
But just going down to the actual reality of that, though. So if we are so P1, we're an ISA manager. If HMRC tell us as an ISA manager you cannot hold that, or that client has breached an ISA limit, you need to do something about it. We have to be able to do that without the client being able to stop us doing anything about that.
I see. Okay, so it's a 2 out of 3.
Yeah, I think the best we're going to be able to do in the short term is potentially facilitate somebody to be able to buy say, a Bitcoin through somebody like Fidelity Digital Assets. I'm only talking about them because they're a well-known institution. They're great in this space. They're regulated. They know what they're doing. They're a well-thought-of custodian. For us, it would be creating a user interface that somebody could buy a Bitcoin through somebody like Fidelity Digital Assets or Coinbase or somebody, and then it's transferred from them to the user's private wallet, so they control it. But then we just effectively facilitate the viewing of it as a non-custodied asset. So this actually, some platforms facilitate this, and it's something that we're going to be rolling out next year, that people can just record assets on our platform, really the user interface, that whole sort of portfolio view of all their assets, alongside their assets that are custodied through the solution that we provide. That's where I see in the short term. It's just providing that interface through to buy and then to display the value and how much you hold through that one common interface, not a thing where we can facilitate somebody to buy a Bitcoin and then there's some sort of multi-sig custody of it within an ISA. That may come, and maybe I'm not saying I'm the cleverest person in the world that understands all of this all over. Somebody may be listening to this and think, actually, you could do it this way. This is how you can do it within legislation. That would work potentially. I don't know how to do it, but I think that's a long way off if it ever comes.
Well, if someone is listening to this and they know how to do it, please reach out to me. I'd love to know. And yeah, I think you're up. So it sounds like you're going to be pulling in assets that clients already hold, but aren't under your management, but they can view them on the platform, and then presumably you can pull all of that data in and potential returns into any cash flow modeling for them as well.
Exactly. So it at least gives visibility to an advisor, even somebody's accountant, to be able to see that those assets, they don't forget about it. It's visible there in terms of price and the units or the sats and Bitcoins that you hold. In a common interface alongside your pension and your ISA and your genuine investment account, etc., etc. That's where I think is probably where we could achieve something in the relatively short term.
Okay, perfect. Well, on that bombshell, James, thank you very much.
Perfect. Thanks, Dan. Good to speak.